Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, February 20th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 3 1/4 at $5.75. March soybeans were up 8 at 10.39 3/4, and March Chicago wheat was up a penny at 5.93. No export sales announcements here this morning, and weekly export sales, as we mentioned yesterday, are going to be pushed back till tomorrow, 7:30. So we'll talk about those tomorrow. We are through 12 of 19 settlements for our spring crop insurance discovery period. Corn is currently 470.5. And soybeans are at 10.57. Good morning, guys. We were talking just before the show. It seems like maybe a little bit of last night's initial pop came from news that Trump was visiting with China, and potentially, there might be some things on the table there. As with any of these negotiations, we're kind of headline chasing. But with that, Justin, maybe a few thoughts to kick us off here this morning, and we'll throw it around the room.
Yeah, I think it's going to be the kind of the normal. You're going to get some of these headlines and speculations on different things like we've talked about, to your point. So yeah, kind of sold off yesterday. All the bull market, things are in place, especially for things like corn. Keep trending up, keep getting people bearish on every break. Every time we're down, it's over. It's kind of the rhetoric. Meanwhile, we've got a big demand market going on in corn, and you can argue that switches at some point this summer, with a big safrinha crop, and all those things are true, but they have to happen. And right now, like we talked about, we're at multi-decade highs for corn exports on today's date. So we're still doing business. We still have good demand. Beans have tried turning down. I think they're trying to hold support here. If they start making new lows, I guess that could get some funds to get short or bearish, on some technicals there. But so far they've held in, and you could argue they've definitely got the worst fundamentals, especially for this point of time. With a big South American crop, fully coming on board, and us being less competitive, but it's still holding in there, still doing good crush demand. So yeah, I think it's overall, generally friendly. We're going to have breaks. We're going to have, setbacks and those kinds of things. We've got, exciting time coming in here with March 31st right around the corner, and then planting, and we're going to switch from the big South American crop that we've been trading for a long time and start focusing on what our acres are. And there's going to be a lot of debates on, like we talked about yesterday, is it going to be 98 million corn acres or 94, or what number? So yeah, I think good markets are still here, and I continue selling big breaks in corn is probably not a good idea at this point in time. And maybe buying big rallies in beans also maybe not a good idea. But other than that, I think it's overall friendly still.
So we talk about a lot on the show, just black swans and things that can change the narrative and stuff. In your opinion, Justin, in the soybean complex, with the global picture, the way it looks, outside of a China deal and a crop issue here in the States, are those the two things that are pretty much the swans for beans to turn around and have a different story?
Yeah, we're not overly, we're not, how I call it, we're not burdensome here in the U.S. Really. It's a South America story for the world carryout, which we know. So we're still that's why we're holding some inverses in beans. We're in the 300 type, 350 carryout levels, plus or minus 50 million bushels. So yeah, China, the big thing there is, does China need beans? It seems like they've probably gotten enough in general, and the lion's share of that's South America. The biggest story in the U.S. is the crush capacity. We're breaking records by 20 million bushels a month. So we've increased domestic crush capacity to a massive degree. The only, and obviously we talked a lot about it in the show, but the billions of pounds of foreign imports of oil and things have offset, some of that crazy demand. Meal has, kind of been able to hang in there. It's been cheap, which has actually been good for the animal sector, having this huge crush capacity and relatively cheap meal, and high animal prices, or meat prices, egg prices, all those things have kept profitability good domestically. I kind of think that's a great thing personally, not relying on China for a huge export program. So obviously any additional deal that gets done could be, pretty friendly. Maybe China does it at an uneconomical level because make Trump happy, and it's a really small price to pay for trying to save their economy, which has been kind of in free fall. So what could seem uneconomical to fundamentalists here doesn't really matter if that's, a bigger political play. So where we sit now, I think, of course, any additional corn business would just be probably wildly bullish. We've talked about, Dustin's been good at talking about, world excluding China when you look at corn stocks. Basically in 1 year, they found half the world carryout and yet continue to import corn. So, I could see where they would, be willing to buy more corn and stockpile it, as something as a favor to Trump, even though maybe they need to buff those stocks a little bit. So it's a $1 million question again. It's a tough one.
Yeah, it's gonna be interesting how it plays out. Ben, maybe take us through. I know we got option expiration coming up here tomorrow. Talk us through some levels here in the front end that we're gonna maybe sort of gravitate towards.
Yeah, $5 has 24,000 open in the calls. We talked about that. They have pared that position back by about 25% over the last 7-8 days. Beans, 1040, a lot of open puts. 1060s, a lot of open calls. I think it's kind of probably shackled up here through tomorrow until some of these options come off. And March wheat has a pretty good chunk open in the 580s and the $6. Yesterday, I thought for corn was a very interesting day when you look at demand markets. We made a new high. We settled back below our previous high area, which was 98.5, 98.75, 99. And in a bear market, you typically would have found sellers right out of the gates in the overnight. And here we are. We traded up to within a penny of the high again. So I think that's just kind of classic bull demand market trade. I think Justin hit it on the head. I don't think you want to sell deep breaks. Wheat got through its 200-day moving average, which has settled above. Found some people willing to get out after a big run up. So there was some liquidation there, kind of drug everything along with it. I think soybeans are kind of a market that maybe in the transition of the narrative that was traded for so long, which is burdensome world supplies, and then mentioned routinely on here by Dustin about the currency issue of people selling beans. And they're kind of hanging in here, interested to see how they'll do come the end of the month. And maybe that narrative is behind us for now. And we can at least slap around between, 10 and 11 for a little bit. So, but beans just to me don't have a real compelling story one way or the other. Reasonable supplies in the U.S. versus ample global supplies. I don't really know what you do with it right now. I think it's going to be a choppy trade and not really go anywhere.
Yeah, the one caveat to that would be obviously acres, right? If you lose some big number of acres that bigger than the market's thinking, maybe you turn the ship a little bit on new crop beans and decide you have to, grow the crop. But again, to your point, there's so much global supply. It's just a lot to chew through. Yeah. So the market's trying to lose bean acres for that reason.
So Justin, we talked yesterday. We're at, you think the market's sort of digesting maybe a 95 type of number for corn. Where you think we're at on beans today?
I don't know. It's tough because I think, trying to see where those corn acres come from, like we talked about, cotton, milo, I think there's some of those types of crops that will pick up some of those corn acres. So I don't think it'll be a 1-to-1 correlation with how many beans we lose. So I don't know.
Could total acres be down?
You know, it's a not a great profitability year. You know, highly subsidized crop insurance keeps acres high in some areas that probably shouldn't. Kind of the prevent plant play, especially if you look at some of the Dakotas and areas that probably shouldn't be growing the acres. But yeah, it wouldn't surprise me if we're down a little bit. I mean, we're definitely not at prices where you would expect, you know, total acres to really go higher. We're not screaming profitability. So, you know, I would think naturally you would lose a little bit of total acres.
Sure. Dustin, something to add?
Yeah, actually, I had one screen share to give Gavin, if you can put that up there. So I think this is an interesting point on this rally, is that, you know, last couple of days have marked a $1 rally off the low for the March contract. That would be the black bar chart here, and the December contract is in blue. So we've had a heck of a rally. It's 25% rally off the low, and we're above $5, which obviously gets everyone very excited when we just went through, you know, a couple years of bear markets and finally seen a cash price above $5 again. Very exciting. But, you know, I think a lot of people will look at this chart and say, well, it's from tightness. And I agree with that completely. You know, Justin mentioned global corn stocks minus China is extremely tight. And we really need South America to come out with a good safrinha crop here in June, July. So all that makes sense of why we would see some inversions here, why the black line's above the blue line, which is December corn. And a lot of it is also the fact that we hit that record low, you know, hedge fund short position July 9th, and we've flipped it toward record high right now. Huge flip, you know, a couple billion bushels. And so when we're talking about like all those things that have caused this, I think the one thing that always gets kind of lost, and Ben touched on this a little bit, is how important the currency is on this. So it gets a little bit technical, but if we switch over to the real's impact on markets, it's hard to kind of quantify that. I mean, I can pull up a chart of just the real going up and corn and beans following as well. But that's not always the best way to look at it. I think that this chart says a lot. And this is basically the orange line that we're calling that spread delta. And it's how much of the March move from that August 26th low through today, how much of that was led by the March contract. So when you see a spread delta of 100%, that means that the March contract had 100% of the move higher. December corn did not move higher at all, right? And if you're above 100%, it actually means December corn actually went lower during that time frame. So, and the real is inverted here. So the real is in blue, and as you can see, the inversion is negative numbers as we go up. So as the real is falling, the spread delta is growing stronger. And that just says everything about the market to me, in my opinion, is as the real continues to fall from a 5-to-1 ratio to the dollar to a 6-to-1 ratio to the dollar, the market says we think Brazil is going to undercut U.S. growers out into the future. And we're going to discount those back month contracts because Brazil is going to continue to be the primary exporter. And for whatever reason, maybe that's what, how quantitative funds have set up their trading strategy. For whatever reason, there's a huge connection there, a huge correlation between these things. And so when we keep kind of harping on the real being a kind of an all-important metric of the market, especially when all of our focus is 2025 crops at this point, we're hedgers. We want to protect what's known and in the bin, right? And look at post-harvest logistics to try to actually, manifest the actual value on a post-harvest logistics. A lot of our focus on how to hedge aggressively or not aggressively is going to be a 2025 issue. And a lot of that, unfortunately, is how it relates to the currency. That's the world we live in right now. So I just want to put a little bit of background education into that and show that correlation and something that's a bit more technical.
Yeah, and Dustin, if you think about it, it makes a lot of sense, with our contract being geared towards, when it was, created decades ago, and we were the only game in town right before Brazil really became awakened, and we went down there and taught them how to grow crops. it's all designed around our delivery markets on the river system, right? So then when you still have that, but all the world trade is basically done in our market, and South America continues to grow in size and scope, where they're now the bigger player, right? So it actually makes a lot of sense when you think about it the way you show it. You've got more supply being traded out of South America than the U.S., and certainly on an export market, on one that's still 100% designed for our river basin and our export market down through the Mississippi. So,
Yep.
Yeah,
That's good stuff, guys. That's 400 level to start the morning. Well done. Rye, we just coming into the open here. Let's touch on cattle here briefly. We got slaughter continues to be revised lower, and it feels like the hogs are kind of trapped in a belly market right now. So what do you got for us here this morning?
Yeah, absolutely. I mean, there's been a lot of focus just on how the week the kill has been and how just we haven't really been able to stabilize beef prices too much, or at least seeing the support I think that the market really would have wanted to see here. So, we did see a little bit of a better price action yesterday, but we're still just kind of sub the 50-day moving average in April. And I think just overall, it's been kind of a liquidative kind of market, but very slowly. Open interest was down to 846 contracts, but the focus is really going to be on cash trade this week. I think the sentiment is still lower. I mean, obviously we got the discount on the board, but perhaps some of this is just because we're expecting placements to be a little bit bigger. So it's definitely been a nice little down here in the cattle sector, but how much is kind of baked in? I think that's the real question. The managed money still wants to be long, I think, in the long term, just from a supply standpoint, but we're just not seeing the real support in beef and in cash that I think the market wants to. So that's creating a little bit of a wave of caution. So we'll see what the report says on Friday, but I think you priced in a lot of pretty bad news. It's just a matter of what position do the specs want to have and what the report actually says for the next few weeks here. On the hog side, the big break in bellies is really what took us lower, down $17 yesterday. I mean, you've taken a lot out of the belly market in just the past 2 days, and we've seen this trend before. We've seen to rally for a week straight, new highs for the move, and then we just collapse. It's happened like clockwork twice. So I think everybody's eyeballing that 100-day moving average for April, and then we'll just bounce back. So it seems like you do have quite a bit of defense getting played here, but open interest was down big, almost a 10,000 decline in commitment. So overall, definitely some liquidation, but the trend is still kind of holding on the longer term. So we'll see if we test those levels in the next few days. But otherwise, I mean, there's going to be a lot more focus on the cutout market and just how those prices kind of react going forward.
Appreciate the update, and we'll get some cattle on feed estimates before the report there tomorrow. Real quick, just came into the open, a good start here. Corn up 4 1/4, 501 3/4. March soybeans are up 8 3/4 at 1040 1/4. Wheat's just slightly lower, down 3/4 at 591 1/4. We've mentioned a couple times export sales will be out tomorrow morning, 7:30 Central. So we'll take a look at that, talk about it in the war room. Also, everybody's favorite part of the week, Fun Fact Friday. Brian will be dropping some knowledge on us, I'm sure. And then we've talked about it a number of times, but now through April 1st, got some special deals going on with AgYield for new clients. Give us a shout. Love to talk to you about some of these important crop insurance decisions, how that all intertwines with your marketing. So if you got some questions or thoughts, please give us a call. We'd love to visit with you. Also, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.